a lot of people might be asking, okay, healthy NPL. Do you have a benchmark for NPL that if it goes below this, okay, red flag. If it's above this, I'm okay. I'm okay still.
Well, right now I don't really have a benchmark for it, but you can easily compare the banks that are listed in the stock market. So you can benchmark that way. If you see one bank having lower NPLs, you can compare that with another bank. Then it's one way of saying that this bank might be more selective when it comes to where they lend their money to. And that could be a great measure of their strength, of their stability, of the controls that they enforce internally. If there is no significant downward movement in terms of the inflation rate, they might even consider raising interest rates again. So we can reasonably expect the market to slow down. So what we typically advise our clients is to, of course, again, all the more so this year than in other years, to diversify.
I want to transition into this topic. You said something very interesting. Rates going higher, and then you said that it will hit economic activity. But if you look at it from a certain perspective, also, isn't that bullish on banks? Because if you look at how things are, their margins are very very big. Eh. Yes, there will be people that may be taking lesser loans. There might be people who might lessen their expansion, and and of course the acquisition that they will be lesser for the banks, but the margins that they will have for the clients that they actually get will be bigger. Hence, they'll actually probably also earn more as well. And given that you mentioned that there are some concerns in the US, they're banking there. But what's interesting about here is our banks are very conservative. The cash, the reserve requirement ratio is very very big, and it somehow protects them and gives them that buffer that it's not an issue here compared to where's in the States. So I guess what I'm trying to say is, with all of this going on, interest rates going higher, and the possibility that it would continue to go higher, are you more bullish on banks?
There's definitely going to be more incentive. Again, when a stock market goes down, it doesn't necessarily mean that literally every sector, every stock will go down with it. So it's usually just the majority of the time. The majority of the market is going down, so it drags down the market. But there will always be outliers. And if there's higher interest rates available there, then that also positions them to charge higher rates when it comes to loans. Then yes, it can translate into higher interest income for banks. That's why it's a good idea to really make sure that inflation doesn't get too high too quickly, because that's going to disincentivize people from borrowing at all. You made a great point that yes, the good thing about the Philippines is that our banking system is actually quite strict. We're very very conservative, so that's good for us. That's a very very good thing for us compared to other countries. There is value in thinking that the banking sector will benefit from higher interest rates. But if it continues to remain really, really high, there might also come a point wherein, people will just not be able to afford borrowing anymore. And so you might see higher income, higher interest income on a per client basis, but the volume of the clients that are borrowing may become lesser as well. So they might balance each other out, or one side will win, whether it's going to increase interest income or it's going to lower them. And there may be more delinquencies in terms of those that borrowed before that re-rate their interest rates. There's all of those possibilities. So at the end of the day, if there is a sustained high level of inflation that is beyond the central bank's targets, which currently it is, it's also not going to be good for the long term. There's going to be a benefit early on while people are still inclined to borrow, but when the time comes that they can feel the crunch already, they're going to consider not borrowing at all because of high interest rates. Then there would be not much benefit for banks in that period.
What's interesting about the Philippine Stock Exchange is that when you look at it from a sector perspective, there's a lot of property stocks, there's a lot of conglomerates, and also there's a lot of banking stocks. So as we talk about the banking stocks, banking sector also, it's quite broad. To people watching this, how would you educate them on what would their approach be on how they could narrow down banks that they would want to choose or to buy? What would be the methodology behind it? Because they can't buy everything. If they buy everything, then they minimize their upside. How would you do it, and how would you share that to people on how they would itemize? Okay, this is what I should look at to know that this bank should be something that will have better promise for 2023.
First of all, especially in light of what's happening in other financial sectors overseas, one thing that you have to consider, of course, if you're looking to invest in banks, is the size, the stability of the bank. So you want to see them not having very very high levels of non-performing loans. You want them to have it under control, essentially, not meaning they're able to become very very selective when it comes to allowing people to borrow their money. So that's one thing that you consider. Of course, another thing is their
quick question on that.
Yes.
A lot of people might be asking, okay, healthy NPL. Do you have a benchmark for NPL that if it goes below this, okay, red flag. If it's above this, I'm okay. I'm okay still.
Well, right now I don't really have a benchmark for it, but you can easily compare the banks that are listed in the stock market. So you can benchmark that way. If you see one bank having lower NPLs, you can compare that with another bank. Then it's one way of saying that this bank might be more selective when it comes to where they lend their money to. And that could be a great measure of their strength, of their stability, of the controls that they enforce internally when they operate their institution.
Okay, so look at NPLs. Number two, you were sorry for disrupting you.
The branch network, the branch network of that particular bank. Sometimes there are areas in the Philippines that are relatively underdeveloped, where there's steady demand for borrowings, for loans, for bank products that may not be immediately obvious to a lot of us who are situated in the more developed areas of the country. So these banks that have presence outside of the typical major hubs in the country, they may actually be able to offset some of their weaknesses in the more competitive areas of the country, in those places where it is underserved.
Hey guys, so in case you're wondering why the video was cut short, Robbi, their area, while we were recording this, there was an unscheduled power interruption, but I do hope you got a lot from that interview. What I'll do the next few weeks, we're gonna have him back again, and we're gonna do a deeper dive on the stock market. And we ended everything talking about banks, because I think what makes the Philippines different versus Silicon Valley bank versus Silvergate is that our banks here are very very conservative, and with them being conservative, it gives them a buffer to protect them, that you won't see instances like that similar to what happened to Silvergate Bank, primarily because of how our banking system is here and how conservative our banks are as well. I just want to note this also, that even if interest rates are higher, it doesn't mean that everyone loses. There will always be winners and there will always be losers. And that when inflation is also lower, or there are certain things in the economy that's different, there will be losers and there will be winners. And when that flips also, there will be winners and there will be losers. And our job as stock investors is to find out and to figure out and to position based on the trends that we see. So please do remember this. It's not about forecasting. It's not about predicting. It's about pattern recognition, because ultimately the market and the economy, they just move in cycles. So if you guys have any questions, put them down below, and I'm gonna do my best to be able to give you as much content as possible to help you and have a deeper conviction about the stock market. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.